Welcome to another edition of Chart Talk. I'm Tony Ogorek. I'm here with our portfolio manager, Jeff Viksjo. And Jeff, today we are talking about how big losses can handicap future returns. And, you know, one of my investment heroes, Warren Buffett, was always sort of adamant about the first rule of investing, which was to don't lose. And his second rule was don't forget the first rule. Now, it's obvious, Jeff, that, markets are going to go up and down and, losses are an unavoidable part of investing. However, there are losses and then there are losses. So let's take a look at the chart we've got here, which takes a look at two different sectors of the economy. And how would you like to comment on this?
Yeah, so we split up the different sectors into boring sectors, which tend to do smaller returns year to year, but not as much volatility. And then the exciting sectors, we can get big gains, but also big losses. And those boring sectors, consumer staples, things like Coca-Cola and McDonald's, utilities and healthcare, they don't move around a lot. And so when you have a terrible year like we had last year, you could see that first column, they held up relatively well. And Tony, our clients know this is our high dividend portfolio, right? These are the stocks that we own, in that group. The exciting sectors, of course, when you have a down year like last year, you see those losses are accentuated. So technology down, 28%, communications, which is mostly, I believe, Facebook down 37%, and consumer discretionary, things like Amazon down 36%.
Well, if we look at healthcare, it's been down an average of 2% a year for the past couple of years. Contrast that with communications, and that's been down an average of 13% over the past 2 years. And I think a lot of people misunderstand the math of investing, and they think, down, up, if it's equal, I'm good. But oftentimes, I won't say oftentimes, always, that is never the case.
Yeah, sometimes you have to win by not losing. And last year, was one of those years where you definitely wanted to win by not losing and being in these boring sectors. To run with your point, Tony, technology was down 28% last year. It is up 14% this year, but you're still down 18%. So like you said, a long way to go to get back to even.
Right. All right. Thank you, Jeff. And thank you for joining us for this edition of Chart Talk.